tax secrets that the rich use to pay no taxes. Have you heard that one before? Or how about tax secrets that your CPA won't tell you about? Well, as a CPA, that's pretty irritating to hear. So I want to talk about tax planning. We do tax planning and it's part of our service, but the way it's being marketed, the way it's being sold is really starting to get irritating. One of the biggest ones I hear all the time too is this short-term rental combined by cost segregation. And yeah, that can be very powerful. But what it doesn't mean is that it's the right fit for everybody. So let's walk through a real quick example. I put together this quick spreadsheet to show, okay, look, let's say in this year, we've got income on a W-2 of $500,000. Now, don't nitpick me here, but this is like basically a joint return. This is about what the tax would be on that. $115,000. 32% marginal bracket, effective 23. So we go, man, that's a lot of money to pay. It would be great if we could get some tax savings and reduce that. So yes, I'm all for that. So the way this would work is we're going to go out and we're going to buy what's called a short-term rental. So this is a rental property, but it's short-term. So let's think Airbnb. So we're going to go get an Airbnb property. And typically what I've seen is we can get max about 30% of that we can take as a first year depreciation deduction. So we take that off of the $500,000 that we made and we have in taxable income, and we get that down to $350. So now our tax due is $70,000. And we go, okay, fantastic. You saved $45,000. And that's what they're selling. So they're selling you that. They're saying, okay, I saved you 45 grand. Pay me 20, 30% of it. Bye-bye. See ya. But what they don't take into account is all the other factors. So let's back up and think about, what is this W-2? Are you a doctor? Are you an engineer? I mean, what is generating this type of income? How much time do you have? What is your area of expertise? Let's just say, for example, you're a doctor, you make 500 grand, nice income level, but you don't have much time because you're working 70 hours a week or something like that. To put yourself now into an Airbnb that you own, okay, let's ask some questions. First of all, do you know anything about real estate? Does this property cash flow? Do you know what the interest rates are? Do you know what the cap rate is? Is this a good investment long term? What type of property is it? Are we talking about a beach house? Is it just some condo downtown? I mean, what's the chances it appreciates in value? Some people, do this all the time. They're, real estate professionals, but some people aren't. So is this the right type of tax strategy for this person? Maybe, maybe not. Like I said, he doesn't have a lot of time on his hands. So are you going to be able to do it yourself on the management, or do we need a management company? There's a lot more to consider to this, not to mention on top of that now we've got, if we're going to finance this, we've got a $100,000 down payment on a $500,000 house. So whereas before we were going to have to give $115,000 to the IRS, well, yeah, we shaved 45 grand off that, but now I need 170 in cash to pay my reduced tax and my down payment on my house. And then remember, now, granted, there's a lot more that will go into this. The Schedule C would likely be, you're going to have interest. You're going to have, it wouldn't automatically just be the flat 150. Okay, give me a break on that. So we probably buy the house like mid-year. There'd be some other activity. Okay, but ballpark 150 the first year. Okay, now let's go to year 2. So now what are we going to do? So this is a one-time, this cost seg, this is a one-time deduction on the depreciation. Going forward, we just have the operation of the rental property. And then we get our straight line depreciation, okay, over 39 years. So is that going to be positive or negative? I don't know. Hopefully it's a good investment and we actually have, positive cash flow, positive income. So then what are we going to do about this tax bill next year? Are we just going to keep buying more? Are we going to buy bigger and bigger properties every year, take on more and more debt? Well, yeah, some people do that. Some people, that's actually their business, and that's what they do. So if that's the right fit for you, fantastic. We can help you do that. But we're not going to just push you into something and sell you something because it sounds good. So, all right, if you are interested in talking to me, you can go to our website, legocpa.com. My name is Ben Lego. I'm the owner. Book a consultation, shoot me an email, and we'd love to talk to you, work with you, and give you more of a personalized tax planning experience and not like the used car salesman approach. All right. See you guys.